Welcome back to Broke Man Finance. My name is Adam, and in this video, we are going to talk about 5 stocks that I am buying with my stimulus check. 2 of these stocks will be safe picks, or what I would at least consider risk adverse. Because let's be honest, with as many EV SPAC, bad EV SPAC, and YOLO plays that's been floating around right now, we could use a little safety. But in this market, to be honest, nothing is necessarily safe. We're just looking for a little less risk with some good returns, and both of these bring that exact thing. 2 will be very affordable growth stocks that I see just generating great returns over the next few years that we can still get in at a reasonable and affordable cost. And lastly, just to keep it interesting, a penny stock YOLO play. But if you like saving money and having more money to invest, then go down to the description below and you will see a list of links. These are the financial tools that I use to get the most out of my money, so that way I can invest even more into the market, at least what I can afford to. And while you're at it, we really hope that you subscribe and hang out with us for a while we continue to bring you more and more videos of things that we feel like have value and what we believe could make you money in the future with investment ideas, tips, that kind of thing. Now remember, I'm no financial advisor. I'm just very passionate about the stock market and personal finance, and I really hope that we can help you achieve whatever financial goals that you have. The first safe one, and I use that term safe very loosely because in this market, nothing's safe. But I do believe that there are certain ETFs that are more safe and more risk adverse than individual stocks, just because with ETFs or whatever, an index fund, you have a bundle of stocks as opposed to just one. The first one on my list, and one that I have mentioned before because it's one of my biggest positions, but it is the Vanguard S&P 500 ETF, otherwise known as VOO, ticker symbol VOO. It is currently trading for $365 at the time of this filming, which is early morning, so I'm sure with just day-to-day volatility, that price could move up by the time I edit. VOO has a dividend yield of 1.54%, and VOO's top 5 holdings shouldn't come as too big of a shocker. You have Apple at 6.68%, Microsoft at 5.3%, Amazon 4.37%, Facebook at 2.07%, and Tesla at 1.69%. In the last 10 years, VOO has obtained a 13.38 compound annual return. If VOO is not in your portfolio, then do yourself and your portfolio a favor by picking up a share. If you cannot afford a share, which I know you can when you get that stimmy check, if you cannot afford a share though, then at least start picking up some fractions of a share and just continuing to add to it, because it's going to continue to give you a great return year after year. It's going to give you a dividend of 1.4%. And it's going to bring some balance to that portfolio by making your portfolio a little risk adverse. For VOO to just completely tank, it would basically take the entire S&P 500, the entire U.S. economy, to just completely go belly up for VOO just to go to nothing. Do yourself a favor and just get a little bit. The next one on my safe-ish list, and I understand that the 2 safe ones aren't the sexiest picks, but they are smart picks. This is the Vanguard Total Stock Market ETF, VTI. It tracks the performance of the U.S. Total Market Index. The fund has returned 7.12% since its inception in 2001. Right now, VTI is trading for around $209, and like I mentioned earlier, that's likely to change by the time I edit the video. But if you look back at around a year ago, which I know everything was in the tank because of the pandemic, VTI is up nearly 73%, and they have a dividend yield of 1.45%. The VTI ETF holds all of the S&P 500 stocks like VOO, and you will see many of those at the top of those holdings similar to VOO, but also they hold many mid-cap and small-cap stocks. In total, it holds 3,551 stocks. With holding 3,551 stocks, it would take a lot to make VTI just go completely under and belly up. Another reason that you should look into having VTI in your portfolio, because they have a decent return, over 7% return every year for the past 20 years. Now think about all that's happened in those 20 years and the corrections we've had. And for a year ago today, we're up 73% in VTI. So if you were buying back a year ago VTI, you would be up 73% right now. They have got a modest dividend yield, so at least you're earning some more money on top of that 7% return. And it's just a safe play that you should consider having in your portfolio just to balance things out. Both growth stocks that I'm buying with my stimulus check are relatively new to the market. The first one is actually a SPAC, not an EV SPAC, but a SPAC nonetheless, and that is Forest Road Acquisition, ticker symbol FRX. This is the Beachbody and MYX merger deal, and once complete, they will trade under the ticker symbol BODY or BODY. Beachbody is responsible for those major fitness hits like Insanity, P90X, and others. They have a massive subscription base already, and now they will combine with MYX's bike and will rival Peloton with their at-home workout capabilities. This industry expects its connected fitness revenue to be $97 million in 2021 and grow to $581 million in 2025. They expect to be a direct competitor to Peloton immediately and believes they will be a more valuable company. For a company to come out and say that they're going to immediately rival Peloton and potentially be a more valuable company to them than them, I would typically say, yeah, right, whatever. They're just trying to get a headline in the news. But Beachbody actually has the credibility to do just that. They are a mega company when it comes to the fitness world, and now they're going public and they're hooking up with MYX and their bike, which is also cheaper than Peloton. Right now, Peloton is trading for $113 and Forest Road is only $11.70 at the time of this filming. I think FRX is cheap considering that I believe that they will be a more valuable company than Peloton is over the next couple of years. The second growth pick for me just went public in January, and I recently mentioned them in a video because I thought they were cheap considering the industry that they are in, and I still think they are cheap considering the industry that they're in. The company that I'm talking about is Petco, ticker symbol WOOF, or yes, Wolf. In 2020, we spent $99 billion on our pets, and this number has consistently went up year after year for decades. For comparison's sakes, that number was $43 billion in 2010 and is expected to cross well over $100 billion this year. I talk about this industry a lot because I think there's a lot of money to be made in it, and if people label me the pet and animal guy in stocks, then hey, I'm good with it because I think it's going to pay off for me massively in the future. Wolf is currently trading for an affordable $23.62 at the time of this filming. A lot of investors have been nervous about putting money here because of past financial issues. However, Petco announced a successful completion of debt refinancing transaction, solidifying its capital position and enhancing financial flexibility. Petco is in a much better place financially, and that balance sheet is getting cleaner and cleaner. Now, March 18th is going to be a big day because that's when their latest earnings is going to be announced. So we'll have a better idea of where they're at financially in the most recent quarter. But regardless, for me, I am long on this company. This company is not necessarily new to market. They've went public and private a couple times, but they just listed in January. They're pushing up nicely. They've had some dips just like everybody else with the slight correction that we had. But I am long on this company because I am long on this industry. I think there's a lot of money to be made. I think this company is a solid and recognizable name in this industry, and I think there is a lot more room to grow. And right now, we're looking at a stock at a very reasonable and affordable price at hovering around the $20 to $23 mark. I think it is a perfect time to grab a few shares, throw it in your portfolio, and just let it push up. All right, for my YOLO penny stock play, which I don't even know if I would consider this a YOLO play at this point. They just got so much good stuff going on, but it is risky because it's a penny stock, and we all know that penny stocks carry a lot of risk. But the company I'm talking about is Interscope Hearing Technologies, ticker symbol INND. I have to go with this one for the present because of the timing of it. I think INND is getting ready to take advantage of the law changes finally whenever the FDA completes all the regulatory stuff that they had. If you don't know, the Congress allowed over-the-counter hearing aid sales back in 2017, but the FDA has been working on getting everything finalized and regulations finalized, and now it's finally here. If you'd like to hear more about that in detail, I got some other videos that I've done in the past explaining kind of what's happened and where we're at in the process and why I'm bullish on this company. But I would have to go with this YOLO play right now just because of the timing. They've even mentioned that the law changes could be done and completed and open everybody up for sales by the end of March. Well, right now it's March 16th. I believe the sales will drive up aggressively once those laws take effect. But another reason I am so bullish on this company is that they recently partnered with GTX Corporation and will be selling Interscope products to 35 countries. But that's not the big news. GTX is engaged in developing, manufacturing, and selling health and safety, wearable GPS, human, and asset tracking technologies, and is planning to collaborate on projects and resell product services for both companies, domestically and internationally. That is huge. That is a big deal that I don't know. I'm assuming people are catching on, but I don't know if people realize the extent of the value of it unless they have a senior member in their family, and especially one that's ever went missing. And we all know that a lot of seniors wear hearing aids and have hearing loss just aging over time. A lot of us are going to have that same issue. But a lot of people suffer from mental health issues that cause them to wander off. Now, if GTX can put a GPS tracking devices in those hearing aids, I think that is a game changer, and I think that is something that to me that screams innovation. And whenever you can start saving lives and reducing the amount of silver alerts that go out on a global basis. And if you don't know what a silver alert is, that means a senior person has went missing because they have certain mental health disorders. So if we could help mitigate that issue, I think that holds an enormous amount of value. And I think that could be a game changer, even more so than or just on the same level as the law change, if we can implement that into these hearing aids as well. There is so much great potential and holds so much value to families with that idea. Now, there are a lot of people, I mean a lot of people, that are ready to invest in Interscope. They see the law changes, they see the innovation with their actual hearing aids, they see the partnerships with GTX, and they are ready to invest some money into this company. But a lot of these people want to see their financials current, and that is holding a lot of people back. Interscope filed a 15-12G to alleviate mandatory SEC filing, thus are shifting to the OTC market as an alternative filer to get pink current for emerging growth companies. Some say this is a smart move for Interscope because it gets them current and is a much cheaper process than going through the SEC. They are currently trading for 2 cents a share. But once their sales start driving up and they got some revenue coming in, they continue to innovate with those hearing aids and the app and the app store. And if you're interested, if you don't know what I'm talking about, please go back and watch those videos because that will make more sense then. They're collaborating on life-changing products, and which hold to me an enormous amount of value for families of seniors, and something that I think could be a game changer for this company. They're getting current with their financials, and they're actually and on top of that, there's a rumor that there's a share buyback being planned for later this year because they've taken a lot of heat for dilution of the shares, and so all that stuff points to me to a good direction for this company, and one where we can see that 2 cents jump up substantially from a 2 cent a share company to, it's hard to put a price on it right now, but I can see this thing 10 times in itself over the next few months, and quite possibly more. Over the next few years, I can see them well over $1, $2 per share. But what are you planning to buy with that STEMI check? I'd love to hear your ideas down below. Are you planning on just YOLOing everything into one company? Are you going to break it up like I'm doing into several different things, into several different sectors? Let me know. And also, I hope those stocks continue to keep ticking back up to those all-time highs. I hope you stay safe out there, and I hope everyone takes care.